Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Erik Wetterling, also known as the Hedgeless Horseman. And we'll put a link to the Hedgeless Horseman down below so you can follow along with Erik's work and analysis. And Erik, it's always great to have you on the show just to find out what's on your radar as far as the junior resource investing space. We were talking about a couple of companies off mic, and a lot of these have interesting news on tap or that they just released to the market. First one is a company we just had on the show last week, actually, Headwater Gold, traded on the CSE under the ticker HWG. And they put out some news to the market where they've got a partnership going with OceanaGold with a letter of intent to explore three different projects in Nevada. And there's a staged earn-in process where Oceana can, it gets up to about 65 million US, and then even they can earn another 10% by taking these projects all the way to a PFS. But you crawl before you walk here. They at least have a minimum commitment of 2.5 million in exploration across these three projects in Nevada. So that's pretty big news. And then they also had one of their other projects at their Lodestar project got a permit. So kind of a double whammy last week from Headwater Gold. What has you animated about the story? And are you surprised we didn't see more of a pop in it, considering these are both really good news releases for Headwater Gold?
Yeah, I think this is an interesting story. It's the new Quest Capital Group and a similar setup as their Inflection Resources company. I don't think this is necessarily to, let's say, retail friendly in the sense that I bet some people look at, minimum commitments like, $1 million, $1 million, $500,000. So it doesn't look like much, but it's like, okay. But then you think about the rest of the deals, like the deals of their other companies. Well, it's very backhand heavy because completing a PFS, that's certainly not cheap. And there's a lot of money. The last one that is a monetary threshold is like 15 million, 50 million, and 10 million. I'm pretty sure that's USD as well. So it's even more in CAD. But to go then from that to a PFS, I don't know how much that is going to cost, but probably some tens of millions, if not more, and depends on what they potentially find, of course. But so Headwater A, it's a multi-asset junior, multi-project junior, and as always, they're going to get heavily discounted on anything except what the market deems as the flagship project, because nobody can be excited about six things at the same time, really. Anybody's going to be focused on one thing, and typically it's a project, for example. You have a company which have very good geologists, and they amassed a portfolio which is, I think, like 12 projects long or something. And insiders have a lot of skin in the game, and they're very conscious, like Caleb had said in a recent interview, about dilution and all that. And if the market is not there, they don't want to dilute for dilution's sake, because of course we've seen that when even juniors make some kind of discovery or show encouraging signs in the drill core over the last couple of years, nobody's even cared. So at face value, it looks like you're taking dilution, and even if you're relatively successful, nobody's really going to care. So you're not going to get paid for it, and if you want to be even more successful, you're going to raise more money at maybe the same price, and that just adds more dilution, etc. And that just gets people ticked off, basically, because the stock isn't really moving higher, even though value is going up because you're de-risking. But at face value, doesn't get people excited. But now when you look at it, okay, this makes it, if this goes through this LOI, then we'll have 5 projects that are so far fully carried by Newmont, and in this case, Oceana. Okay, we know that there's geological potential here because you have a mid-tier and the largest major saying there's potential in these projects. So they have potential, and the market cap is what, 20 million? So that's 4 million CAD per project. That's what I kind of like about, these I would consider like hodl stories, in the sense that, hey, if things go well, they're going to be fully carried until PFS or a buyout. And you get at least 5 kicks at the can that we know of that are fully carried. So in a sense, they don't need to do any dilution and could just play these 5 projects out. And obviously, if any of these larger companies finds something that is of interest to them, a single, let's say, success would be a company maker for a 20 million CAD market cap junior, because we know that if they bring any project to a PFS stage, and that of course some years out, 25% plus a royalty is going to be worth a lot more than 20 million CAD, because otherwise one assumes that they would do a PFS study on a project that they think is worth less than 100 million CAD, and that's just not going to happen. So I mean, this is a staple of the early stage explorers in my family portfolios, for example, because this, like inflection, there's nothing can really kill this story for a long time, because you would need to kill all the projects, and you will see these probably get tested, all 5 of them. Well, they already have a discovery at Spring Peak, and we're hoping for Lodestar to also deliver something. So I guess what I'm getting at is not necessarily the sexiest stores out there, because it's multi-asset, it's not 100% ownership and all of that, which retail typically, again, discounts multiple assets, and they want, they buy because of greed, let's say, so they typically want to see 100% ownership, even if that comes with, knowingly or unknowingly, a lot more risk. But from a more, let's say, patient investor standpoint, I think it's just a super cheap bet.
Yeah, I think that's a great point, Erik, because if you have a one project, 100% owned project, and it's a drill it to kill it project with a tiny explorer, yes, it can move up the most, and people love those swing for the fences, binary bets. But with something like a prospect generator model where you have multiple projects, multiple assets, multiple drill programs, 2 different larger producers in here as partners helping fund it, you don't have that 100% ownership of any given project, but at the same time, you have so many more opportunities to have success. So like you say, for the patient investor, yeah, maybe it doesn't pop 300% on the first thing. Maybe it pops 50% or 100% and then gets traction from there. But there still will be value created in the company at those projects if any of those targets hits in a big way. And these are big targets that major companies are going after. So they're also still swing for the fences. But if you have 20 or 30 or 40% of a project, that's a major project, that's still way more than the market cap that you see right now in Headwater or similar companies. So interesting to look at the prospect generator side of things. Let's also look at another company that's got some exciting exploration underway, and that's Altamira Gold. It's traded on the TSXV under the ticker ALTA. Now they're in Brazil, and they are finally getting a big drill program organized here because they just did a capital raise earlier in the month in July. So now they got the funding, and then Aura Minerals came in again as their partner. So you got a gold producer in there with them. So what has you animated here about this drill program that Altamira is engaged in at their Cajueiro project in Brazil?
Yeah, I mean, I like this from kind of, a contrarian setup, in the sense that they haven't really drilled in several months, I was going to say, and the market kind of have known that they don't have that much cash, so they can't really drill. And at the same time, or meanwhile, they have basically done boots on the ground exploration and all that. So over the last, let's say, 6 to 10 months or something. I don't know if that's totally accurate, but my point is that they have been out there and kind of delineating new targets close to the discovery they have at Maria Bonita. They actually have a resource there as well. And their Cajueiro Central deposit, which already has like 700,000 ounces of gold. So they've done like increasing the potential, let's say, by, soil sampling, geophysics, all that. They had Richard Silito, I'm pretty sure it was Richard Silito, down there to take a look. He's a world-renowned porphyry expert. So they have a dozen or so targets there, but the market doesn't give a crap, because they can't really threaten the market of monetizing before there's a placement. So the market didn't care much about pricing in the potential, because the market know, well, in order to show that this potential could translate to something of significance, you need money. So the next, let's say, quote, material news release, I think the market has been expecting, was a placement. So, and I'm not sure that, company has wanted to do a raise at these levels, because it, to be frank, has looked very cheap. So I think they kind of got stuck in that situation where you don't want to raise because it's so cheap, but the market is not going to price it higher because they know you need to raise. So it's basically not priced in any of the new targets. It hasn't really followed the sector. It hasn't really followed the gold price, which suggests that that's not what's been driving the valuation. And I think that this recent financing is what was driving the valuation. So now we have fresh vote of confidence from a Brazilian producer, Aura Minerals, and they don't really care that much about real speculation as far as I understand. And when I talk to the company, they look for projects that will likely become mines. And they don't need to be like tier 2 or tier 1. I mean, they have become bigger as of late, so maybe their threshold is increasing. But that's just good in this case, because then you have an even bigger company with fresh vote of confidence. So now it's, I think, interesting from the perspective of, well, we know they have something that Aura Minerals like. Their projects has potential. You have a price that's been very punished because everybody was expecting a placement, so it hasn't really priced in much of the other targets. And all of a sudden now, after this financing, they're going to go out and now they can actually test that. So that potential can all of a sudden translate to something meaningful, let's say. So in that case, that would be potential that the market didn't care about that actually becomes something of significance. Let's say they make a discovery or two, and all of a sudden it's going to matter for, let's say, current shareholders or anybody who has a, let's say, share at this very price, because it's probably going to go up in that case. So I think it's an interesting sleeper story that's like it's been boring for nothing to do really with the project's potential, but because of the financing, let's say. And in the meantime, why Aura Minerals and other people are putting money in is because of the potential, and they already have gold in the ground. So I think that speaks to, combined with Aura Minerals refreshed participation, I think that points to some kind of margin of safety, and they have all these targets. Yeah, I think it's an interesting spot right now where it's basically been, quote, dead money. It's been boring as hell, but now they're about to, maybe show why Aura Minerals, let's say, get in again.
Yeah, I think from a timing standpoint and valuation standpoint, it's a good time to look at a company like Altamira where it's been sleepy. People have been waiting for the financing. The financing is behind them now. They've got the money. They've got a partner. They're going in to drill. What they've got in front of them now is catalyst. So you got a lot of potential upside catalyst. Obviously, they got a hit on what they drill, but the propensity for an upside move is a lot greater now with all those other things, check boxes behind them. So definitely interesting to bring that back up. We hadn't talked about Altamira in a while. And there's another company that we're going to talk about that we haven't talked about in a while either, but we have in the past, and that's Cabral Gold, traded on the TSXV under the ticker CBR. They're also in Brazil, and they are looking at taking a top layer of the soil called saprolite that has some gold in it and monetizing that by putting into, it's basically like a giant bulk sample in a way, and they would generate some revenue. But they're also, busy drilling, and they just put out some good drill results back in May. But again, we're almost in August now, so the market always wants to be fed news. And so you're looking at there being some upcoming catalysts from Cabral Gold that have your attention. What has your interest here and the value proposition that you see in Cabral?
Yeah, sure. I mean, it's not anywhere near as sleepy as Altamira's been, I was going to say, but in last few weeks or something, it's kind of been trending down after they raised quite a bit of money. So they right now have quite a bit of ammunition. And the thing with Cabral, for example, is like you get both of two words, and not best maybe of two words, but you have that saprolite, which we're expecting an updated PFS study on the saprolite, which is like relatively low capex, easy type production. You're basically, taking the gravel close to surface, and it's gold bearing. So should, in my opinion, I think it's going to be pretty good margins on that. It's not a big multi-million ounce mine or anything, but at least it's cash flow, and at least gold is at what, $3,300. So this is not a multi-year mine build or anything like that. So assume they put out a PFS study and then they start project financing. I don't know exactly how quickly they can get that up and running, but relatively quickly, I would say. And in that case, again, I haven't seen the PFS study, but I think if they get that in production at these gold prices, that should be meaningful cash flow for a company of Cabral size. And I expect there to be more saprolite to be found out there as well. So I think that's going to grow. But they also have the hard rock potential. They have, let's say, an alluvial district. It's not far from TZ, which G Mining put into production. So there's a crap ton of targets. They've hit at many of these targets, but haven't really followed that up. So there's a lot, I think, of hard rock potential plus saprolite potential that, I mean, until it's proven not to be true. I mean, I guess there's saprolite potential at any near surface high grade target where they're finding boulders, etc. that are gold bearing. And they currently have 4 drill rigs up and running. And there was some time since the last drill result. And they've been able, I mean, Cabral has put out some really good drill results over the last 2 years. So when I look at it, it's like, okay, you have a chart that's, somewhat trended down recently. It's not that it's done poorly over the last year, but recently, and we're about to, enter a period where you're gonna update a PFS, project financing, I would expect shortly after that. Plus, you're gonna have assays from 4 drill rigs over the next, whatever, 6+ months or so. So, I mean, if that happens, looking at a case where in the not too distant future, they might be on the way of becoming a gold producer. So that's the second part of the Lassonde curve. And it's not huge in terms of production, but that's okay because the thing is that they have 4 drill rigs for a reason, which is because there's so much exploration potential. So, I mean, we talked about this a long time ago as well. That's, I still see Cabral as a shot of, let's say, getting a self-funded growth machine going because it would sure be pretty nice, I think, if they get the saprolite production up and running at these gold prices. And I would assume, again, that would be meaningful cash flow. And if they could self-fund to have 4 drill rigs, or who knows, maybe even more if they just went pedal to the metal in terms of exploration, and you wouldn't need, let's say, to have any placements, because we see what happens with companies. We just talked about a few who have the potential to have targets, but the story, now and then and seasonality, yada, yada. So they get very volatile and there's a lot of game playing around financing, yada, yada. And we see that in Goliath, for example, after their drill campaign ended last year. If you can escape that without anybody being able to, let's say, fleece warrants, etc., that could theoretically be quite a fun ride where you don't really need to worry too much about dilution and you just can sit back and relax and see some small junior producing, some good cash flow. And hey, I mean, if it looks like there's gold everywhere, so who knows what they could be finding. So in a few years, if they have some good success and are self-funded, that again would be pretty good, I think, hodl story, where you don't really need to pick any, particular top because nobody has any idea how much gold there is there because of the amount of targets. So I like it from a potential self-funded hodl growth story, basically. And I think it's been relatively boring in the recent times, but there's some big things coming up which could produce some excitement.
Yeah, it's nice when a company goes from a little bit more stagnant to having a lot of catalysts coming up. And I really like the angle with Cabral and a lot of these juniors that we're seeing now that are finding ways to become more self-funded because it cuts down the constant overhang of doing dilutive financings. Not that they won't do financings again, just that if they had some other money coming in from small scale production, that sure helps out. And we've seen other companies do that by doing bulk samples. We've seen other companies do that by doing some trial mining or by doing some toll milling or just some different ways. And some companies have actually bought producing mines. So I like the idea of a self-funded junior that's really an exploration company, but just has a little bit of help on the revenue side. So definitely keep following along with Cabral to see how that goes and see how their catalyst unfold. And like you say, there's a lot of targets there. And I appreciate the update on both Headwater and Altamira. All interesting companies, all with catalyst on the horizon. So definitely appreciate you sharing those with our audience, Erik. And if those of you listening in want to follow along with Erik, definitely click on the link below. It takes you over to the headlesshorseman.com website where you can follow along with Erik's work. And just real quick, a quick announcement, a plug for an event we're doing on Wednesday. We are going to be doing a webinar with Silver Tiger Metals, traded on the ticker SLVR on the TSXV. And we're going to be diving into all kinds of catalysts coming up for that company. So if you're interested in the silver space and want to be on this webinar with us here at the KE Report, definitely click on the link below in the show notes. Once again, Erik, great having you on the show. And as always, looking forward to our next conversation.
Thanks, Chad. The same. And like I always want to point out, consider me biased. I own shares of all these companies, and Cabral and Headwater are banner sponsors. So twice biased. Do your own due diligence.